Thank you very much, and assalamu alaikum, ladies and gentlemen, and I'm sorry that that introduction was almost as long as my address. It makes me realise just how old I'm becoming. Distinguished participants, ladies and gentlemen, good morning. It really is my pleasure to speak to you today as the Chief Executive at the Dubai Financial Services Authority, the DFSA, which, as most of you would know, is the regulator of the DIFC, the Dubai International Financial Center, the financial center just down the road from here. For those of you who are not aware, the DIFC has emerged as a leading global international financial center. Some 7,000 companies. We regulate some 900 plus financial institutions. Everything from major international banks and institutional groups, such as Standard Chartered, through to fintech startups. And the centre has employees, about 46,000 people who are working within the precinct of the DIFC. The growth of the DIFC in recent years has been impressive. Last year was our busiest year ever in terms of issuing new licenses. The year before that had been the busiest year ever up until then, and 2022 had been the busiest year ever up until then. As a regulator, though, let me say that it's also encouraging, and in fact more encouraging as a regulator, that the business in the financial centre continues to deepen and not just broaden. It's great to have all the new firms coming in. It's great to have some fintech startups coming in, and we do welcome that. But the mark of a financial centre is the depth of business that takes place. Standard Chartered is a very important contributor to that, both broadening and deepening its business in the DIFC. In today's address, I'll provide an overview of the Islamic finance sector in the DIFC. I'll talk about our approach at the DFSA, our approach to Islamic finance, discuss some of the recent work that we've done on this topic, as well as some future steps that we'll be taking, and offer my views on what I believe will support further growth for the industry. To give an overview of the Islamic finance business in the DIFC, the population of regulated Islamic firms, whether fully fledged Islamic firms or institutions operating an Islamic window, has been steadily growing. Islamic firms in the center have increased some 29% year on year, just over between 2024 and 2025. Islamic assets have grown 74% since 2020, from $8.2 billion to some $14.3 billion today. The majority of these assets are non-trading assets with a good diversification of the underlying Islamic products used. The DIFC, through Nasdaq Dubai, our regulated exchange in the DIFC, remains one of the largest jurisdictions for the issuance of listed sukuk. We encourage a broad range of sukuk instruments and published in 2018 our Green Bond Best Practice Guidelines, which paved the way for successful issuances of green instruments. Nasdaq Dubai in the DIFC has successfully attracted issuers from across a diverse range of industries, sectors, and jurisdictions, and a variety of regional and international investors. As at April end, the exchange hosts 173 sukuk issuances, with a total outstanding listing value of $94.4 billion and 21 ESG sukuk issuances with a value of $15.8 billion. Now moving to the DFSA's approach to Islamic finance. As most of you would know, the DFSA is a Sharia systems regulator, not a Sharia regulator. As a Sharia systems regulator, we expect our authorized firms engaged in Islamic financial business to implement systems and controls to ensure that the business is conducted in accordance with Sharia. Central to our approach is our belief in risk-based regulation. Many of the issues and risks in Islamic finance have their counterparts in conventional finance, and we believe they should be addressed similarly. So, our regime for Islamic finance is integrated with that for conventional finance, but with explicit recognition of the structures and risks of Islamic finance where these are different. For this reason, we have a dedicated rulebook module on Islamic finance rules to address Sharia characteristics. For example, we require firms to appoint a Sharia supervisory board of at least 3 competent scholars to conduct regular Sharia review and to have systems and controls in place to disseminate the SSB's rulings. Our Islamic finance requirements are principle-based, represent general standards on governance, and provide the DFSA and firms with a clear and enforceable measure against which to assess the firm's performance in addressing Sharia-related risks. We align with internationally accepted standards and principles in Islamic finance, such as those of AOFI, from a Sharia governance standpoint, and IFSB. In terms of our recent activities in the area of Islamic finance, in 2023 and 2024, we conducted a fact-finding survey on Islamic finance practices in the DIFC to help us to gain a better understanding of how authorized firms implement Sharia systems and controls and Sharia governance arrangements, and to learn more about the Sharia compliance culture in the DIFC. From that survey, we've noted the adequate oversight of Sharia Supervisory Board over Islamic finance business and Sharia compliance practices, supported by compliance, risk, and internal audit functions within the firms. But it has also become apparent to us that the manner in which firms comply with our Islamic finance requirements varies in both rigor and effectiveness. There are noted variances in the way firms implement the Islamic finance systems and controls requirements, depending on their activities, their size, the scale of business, and the jurisdiction from which they originate. Now to our future plans for Islamic finance rules. Alongside the survey, we are currently carrying out a holistic review of our Islamic finance rules, following which we would intend to update our requirements to, firstly, clarify our expectations around Sharia Supervisory Board responsibility, also to clarify endorsement requirements for Islamic activities, and to align our Islamic prudential rules with the core principles for Islamic finance regulations, which is a supplementary set of standards of the Basel Committee. I'll touch next on 2 points that I believe the Islamic finance industry could consider in seeking to unlock future potential. These won't surprise you, and are standardization and embracing innovation and technology. Whether we call it standardization or harmonization, the alignment of different Sharia standards across different jurisdictions has been an ambition for participants in the Islamic finance industry for a long time. Though action has been taken at a country level to foster harmonization, more can be done at an international level. The UAE has undertaken several key initiatives to standardize Islamic finance, aiming to position itself as a leading global hub for Sharia-compliant financial services. These initiatives are spearheaded by the Central Bank of the UAE and its higher Sharia authority, focusing on harmonizing practices across Islamic financial institutions. The HSA's adoption of Sharia standards issued by AOFI as the minimum requirements for compliance by Islamic financial institutions in the UAE has helped to ensure consistency with internationally recognized practices in Islamic finance. Further initiatives, such as the Central Bank's introduction of regulatory standards on Sharia compliance function, as well as standards for Islamic windows, contribute to greater consistency. We at the DFSA believe that the Islamic finance sector will benefit from further unified international framework, and we stand ready to fully cooperate and work along with federal and international authorities to achieve this. Moving to discuss innovation and technology, over the past 10 to 15 years, the world has seen an acceleration in innovation. Significant trends are emerging across the technology landscape, from AI to digital assets and blockchain. These are not passing trends. They are foundational shifts that are redefining the future of finance, with new players entering the markets with the aim to compete or to disrupt traditional methods in the delivery of financial services. The Islamic finance industry has also witnessed innovations in relation to not only processes, products, transactions, but also in regulation legislation, and standards, as you heard before. Whether the level of such innovation is enough or not is a topic for a separate debate, and I know will be talked about during the course of today. We believe the industry should continue to evolve and keep pace with technological advancement. We recognize that in the Middle East and Southeast Asia regions, Islamic financial institutions are embracing technology and AI-driven tools to improve efficiency, reduce costs, and improve customer experience. However, the pace of innovation and adoption in the industry varies compared to the conventional counterpart. Most regulators around the globe, including the DFSA, are encouraging innovation and the adoption of new technologies, supporting the development of technology, and encouraging innovation within the DIFC is an important pillar, both under the DIFC Future of Finance strategy and the DFSA's business plan. I'll close by sharing that Dubai continues to demonstrate significant progress in positioning itself as a significant actor in the Islamic economy. We at the DFSA reiterate our support for the growth and success of the Islamic finance industry in the DIFC, Dubai, and globally. Today, we see a great opportunity for the global Islamic finance community to accelerate progress towards achieving shared prosperity and sustainable growth. Thank you.